It already happened. By the time most XRP holders refreshed their charts, the move was complete. The breakout printed, the volume surged, the narrative flipped from boredom to urgency in less than 2 hours. Banks just made their move, not publicly, not with a press conference, not with some flashy headline tied to Ripple Labs, but in the structure. I was staring at the 4-hour chart when the red resistance line, the one that rejected price for weeks, finally cracked. Not shattered, cracked, clean, controlled, almost polite. That's what unsettled me, because chaotic breakouts are retail. Clean breakouts are capital. And the moment it happened, liquidity shifted. Order books thinned on the ask side. Spot bids stepped in quietly. No massive leverage spike, no funding rate explosion, just steady absorption. Then I saw something else. Large transactions moving off exchanges, not onto them. That's when it hit me. This wasn't a reaction to news. This was positioning ahead of something, and if banks have already positioned, if this breakout wasn't for us but before us, then the real question isn't whether XRP is going higher, it's whether you're early or already late. Let me show you what I found. I had been watching XRP compress for days, tight range, lower highs, flat volatility, the kind of structure that makes retail lose interest, silence in the order books. Then suddenly, expansion. Price pushed through resistance during low headline traffic. No viral posts, no regulatory bombshell from the U.S. Securities and Exchange Commission. Nothing dramatic. That's important. When retail drives a breakout, you feel it. Funding rates spike. Social media explodes. Liquidations cascade upward. But this time, calm. Volume increased, but it wasn't chaotic. It was layered, almost paced, like someone splitting large orders to avoid slippage. That told me something critical. This wasn't emotion, it was execution. And here's what stood out. Open interest lagged behind price. That means derivatives traders weren't leading. Spot markets were. Spot means ownership. Ownership means intention. Someone wasn't renting exposure, they were acquiring it. The breakout wasn't a celebration, it was a transfer of control. And whenever control changes hands quietly, it usually means the next phase has already been mapped out. After the breakout, I expected continuation. Instead, I got a pullback, fast, surgical, down to the exact level where late breakout buyers placed their stops. Red candles flashed at 3 a.m., liquidation clusters triggered almost perfectly below the former resistance line. It was too clean to be random. I've seen this pattern before. Push price up just enough to create belief. Let retail chase confirmation, then sweep liquidity to refill inventory. But here's what most people missed. The pullback volume declined rapidly after the stop run. That means sellers weren't aggressive, they were reactive, and reactive selling is weak selling. While emotional traders hit market sell, limit bids absorbed everything. No waterfall, no panic spiral, just absorption. This wasn't a failed breakout, it was a liquidity harvest. And once weak hands are cleared, price tends to move with less resistance. The question wasn't whether XRP was manipulated, the question was who needed cheaper inventory before the next leg. Around the same time, I checked large wallet activity. Significant XRP transfers moved off centralized exchanges into custody addresses, not frantic withdrawals, structured ones. That difference matters. When panic hits, flows spike chaotically. When institutions reposition, flows look scheduled. What I saw looked scheduled. And here's the uncomfortable part. Exchange reserves dipped slightly while price stabilized. That suggests accumulation, not distribution. If banks, or large financial entities testing exposure to Ripple's ecosystem, were increasing allocation, this is exactly how it would look. Quiet, unannounced, invisible to retail headlines, no press release, no official statement, just balance sheet adjustments hidden behind volatility, and when large players remove supply from exchanges, future sell pressure decreases. That doesn't guarantee upside tomorrow, but it does signal confidence at scale. And confidence at scale tends to precede narrative shifts. Regulation is XRP's shadow. Every move lives beneath it. I've been tracking policy discussions and timelines around digital asset clarity. Not hype, just procedural calendars, committee reviews, enforcement commentary, delayed decisions, markets front-run clarity. If institutions sense reduced legal overhang, even slightly, they position before confirmation, because once clarity is public, price adjusts instantly. The absence of negative escalation from the SEC recently hasn't been dramatic. But markets don't need drama, they need probability shifts. And if probability of regulatory relief increases even marginally, capital reallocates quietly. That's how banks move. They don't wait for green lights. They move when red lights turn yellow. And this breakout felt like a yellow light moment. I asked myself a simple question. If I were managing a large fund looking to increase XRP exposure, how would I do it? Not with a vertical green candle, not with headlines that cause FOMO. I would accumulate during boredom, trigger a controlled breakout, shake out emotional traders, absorb their liquidity, then let structure build. That's exactly what I'm seeing. The red candle wasn't weakness, it was filtration. Markets don't reward impatience, they transfer capital from the impatient to the positioned. And right now, the positioned look calm. That calmness is louder than any pump. I watched sentiment flip in real time. Before the breakout, XRP is dead. After the breakout, it's finally happening. After the pullback, another fake move, emotional whiplash. That volatility and belief creates opportunity. When retail loses conviction, they reduce size. They stop defending support. They wait for confirmation that never feels safe enough. That vacuum of confidence allows larger players to scale without resistance. And here's what worries me. Retail is focusing on the wick. Smart money is focusing on structure. Those are two completely different conversations, and only one of them controls the next move. Since the sweep, XRP hasn't exploded, it's stabilized, higher lows forming, volatility compressing again. No dramatic headlines. This is the stage most people ignore. But this is where positions are built. If banks made their move, they're not chasing price upward aggressively. They're defending zones, accumulating dips, testing liquidity, testing. Price action now feels defended, not hyped, defended. And defended markets don't collapse easily. They expand when pressure builds. Here's the uncomfortable truth. If banks just made their move, they did it before you felt safe, before confirmation, before the mainstream narrative flipped bullish. That's how capital wins. It positions during doubt. I'm not saying XRP is guaranteed to skyrocket. Markets don't promise anything. But I am saying this structure doesn't resemble distribution. It resembles preparation. And here's my warning. If you wait for headlines to tell you it's safe, you'll likely buy into strength, not into opportunity. Watch exchange reserves, watch spot volume, watch regulatory tone shifts, because when banks move, they don't announce it, they position, and by the time it feels obvious, the real move is already underway.